Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, December 7th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. As we continue throughout the week here, we have remained within a very narrow range over the last 2 weeks of trading. You can add another week before that. It's still 3 weeks of very narrow price action here, still sitting at the highs, still sitting at the 4,600 market structure edge. Again, these 400-point distributions this year have been tremendous. The 4,200 level was one level here. Above that level opens up 46, and that's what we've gotten. 44 would be the mid pivot target right there. Saw the same thing on the way down from 4,600 here, making its way down to 44. Little bounce and then making its way back to 42, and before that we saw a similar rally where price takes out 4,200 and rally to 46. So 46 to 42 has been a tremendous range here so far in the latter part of the year. Narrow range here. Does this lead to a breakout and expansion out of this 400-point distribution, or do we rotate back down? Do we go back to 4,400, the middle of the range, and rotate back across the range, or how does this develop here? This narrow range has a ton of energy, and we could be looking at significant expansion at some point here, perhaps NFP Friday, NFP report prior to the RTH Open tomorrow morning, in addition to a ton of other economic data points that could finally lead to expansion. For today, watch the previous week's low. Can we get the previous week's low? If not, again, we may be moving right back up within the range here and staying inside the range. Now, bears have a slight advantage here with the rejection here early on to begin the month, a drop and a little failed new high, again rejecting here, and prices above the previous month's close being defended so far. So any pullback could lead to some selling opportunity here today. Perhaps if price fails at 45.80, it could rotate back down. 45.75, rotate back down. But right now, still bullish, still in a very tight range, and that means a lot of chop back and forth could be seen until we get the true expansion. All right, taking a look at the NQ. Both the NQ and the ES are trading 39% of ADR ranges here heading into the RTH Open. Super narrow ranges, 39% here. And again, this one has bearish qualities right now, but still a very narrow range that could break in either direction. You see this narrow range that's developed over the last 15 days. Rounded top quality, failed new high on the right edge over here after a higher high failure here. This all could open up weakness ahead. And right now, this range over the last 3 weeks has about 1,000 to 1,200 points of energy built into it, so we could be looking at quite the move once we get that breakout ahead. Again, a slight upper hand to the bears here, at least to begin the month. Downward trend here, prices above the previous month's close being offered and rejected at and above those levels. So slight downward bias here, but we really haven't broken just yet. If we do break to the downside, a stop run day likely occurs, and that can open up some weakness back down to 15K and maybe below into about the 14.8, 14.750 zone. That could open up quite the move down below. So keeping an eye on this area. Again, we may not see true expansion just yet. Today could be a fade back up within the previous session's range until proven otherwise. All right, taking a look here at crude oil. Crude's up about 1% at the moment. 40% of ADR. A fade back above. It's reached all of our targets and done so in big fashion and on a timely schedule. We were looking at the end of September for price to drop into the first week of December, which is this week, and we were looking for price to make its move back down toward the previous year's low. That's this price here. And also the previous quarter's low, which is actually this price. 69.69 is the previous quarter's low. Previous quarter's mid broken, and we made our way back down. Previous year's low is 70. We've made it to that level as well. So we've pretty much wiped out all of the targets here that we needed. We could get a little bit lower into 67, 68, but we've pretty much, for all intents and purposes, finished out the trade idea there. Now, do we get a fade back up? At the moment, fade after trend day developing. Price currently above both the previous quarter's low and the previous year's low at the moment. Can price push back through the previous session's midpoint and open up a bit of a squeeze here? After you do see a 2-month seasonal downtrend here, you tend to see a little bit of a bounce back up into the end of the year with the potential to rally in the first few weeks of the new year. So if we can find a strong low here pretty soon, that could lead to a little bit of a counter trend bounce up ahead. All right, taking a look at gold futures. All right, here's a look at gold. Gold with a narrow range day here today, 30% of average range inside the previous day. The previous session was inside Monday's, or rather Tuesday's range, so we have a 3-day narrow range after Monday's major rejection. That major rejection could be a huge, not only day 1 rejection, but a major pivot high for a long while to come. 2080 still the big level here. 3-day narrow range. Any pullback here, failed new high, outside day down, continuation to 1950. 1950 is value. It's value for the year. In terms of yearly VWAP, the 200-day moving average is 1960, so that's going to be your value target down below after rejection way up here above value. Bang, snap back to that zone over the course of the next several weeks. Again, failed new high could be a great way in. Perhaps that develops Friday. We may see an attempt here that could open up some weakness back down. All right, taking a look lastly here at the YM. Right here, the YM, super narrow range over the last 5 sessions. Narrow range sitting above 3,600. This market has been super bullish, very vertical and intense in the trend. No real pullbacks to speak of that aren't within range. And we really haven't seen any signs of strong rejection just yet. I mean, we've seen price move down off the highs, but really no strong rejection. Still pushing higher. At some point, obviously, we may be quite overextended and pull back. We are overextended at the moment. These right here are 3rd standard deviation signals here. 3rd standard deviation above value, which is way down here. At some point, we may get that rejection and return to value, even if it's on a short-term basis. But we need a strong rejection. We need that reaction. And maybe we're not done yet. This thing has had a super strong trend. Maybe we need one more move to go finish out the previous highs and get new highs here, which could turn us back down into value ahead. So still hard to fade the strength of the YM, but we may be getting closer to that fade back opportunity. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.